you might have a little increase on your wage, but your wage hasn't gone up to compensate for that massive increase in inflation.
And I think what people have to realize is the number one thing that I tell everybody they have to do is they have to figure out how to raise their income. Well, we are live. This is the Money Hole Podcast. I'm Chris Lamm, mortgage lender for 22 years. We are on our 54th episode.
Come on, dude. That's amazing, bro.
Broke a year.
That's
and
awesome.
I'm sitting here with my great friend, Fabiano Altamura. He's one of my best friends. And if you're watching this, and I know a lot of you do, please make sure to like, subscribe, or comment. And we're going to ask you guys some questions. I'm excited to talk about some of the questions I've been getting about the housing market. Pre-election right now.
Yep.
We're getting close. A lot of craziness going on. An assassination attempt on President Trump. And we don't really get into politics. However, I want to tell you, don't you think the word politics has been a word that's been completely abused to be a cover-up for things that we really need to talk about?
I mean, maybe when people say I don't have a political opinion, I mean, that's pretty crazy, right? Because everything is affected by politics.
Exactly. And
right?
I don't like to get into who I'm voting for or who you should vote for too much, because it is something that can create, some disconnection with people. But I do think that if you're someone that lives in, let's say, California, which is where we live, and you work and pay bills and pay taxes, it's hard not to talk about things that are going to be politically heated topics.
Yeah, because it affects everything, doesn't it? Everything. It affects look at inflation.
Yep,
it's affecting everything. When you go to the grocery store and it's up 25, 30%, you can't tell me you're not in a politics.
So my heart for people is to always take the lessons I've learned, the lessons a lot of my friends have learned, and to help put their families in the best possible position financially, relationally, and in every other way. And unfortunately, that does require that we talk about subjects that are going to be tough to talk about, because some people believe that this is their guy, and if he got elected, he's going to solve all their problems. Some people think it's this guy. And the truth is neither of them are going to solve all their problems. They need to solve the problem.
Right. And also, I will say one thing. Having my green card, but not being an American yet, I would say the way I've noticed voting is people are voting against a person because they don't like them rather than voting against policy.
Right. That's a great.
You know what I'm saying? It's like, 100%. I know we said in my...
We're going to talk about that on the next episode.
Yeah. And listen, here's the thing. I know in one of our episodes that we did, I said Biden was an imbecile. And then Ahab was like, yeah, but look, the guy might have onset of dementia. Listen, I'm not commenting on the fact that he's ill. That's sad. Like Donald Trump getting nearly assassinated, it's really sad. And whether you're red or blue, it doesn't matter. An assassination attempt is bad. I just think whether he's well or not well, he's still an imbecile. So sorry, dude.
He's an old man. That has some problems.
I just wanted to clarify that. You might
have made it worse. You might have. I don't know. We'll let them comment on it. But here's the thing. What we're going to talk about today is if you're a middle class to upper middle class family, and you are, or even if you're not a family, if you're a single person, or maybe you're someone who's aspiring to be upper middle class, you're not there yet. With what's going on in our country right now, how are you to take action to try to improve your family? Because it's uncertain right now, and it's scary, and people are nervous to make any major decisions like, should I buy a house or not? Or should I wait on the market or not? And that's what we really want to talk about today.
Yeah. I mean, what would your answer be to that? Because we're in a housing crisis. Interest rates are high, very high.
Yes.
So what would you say a person should do in that situation? Like if I want to buy a house, what would you recommend?
So the first thing I want to do is address interest rates, because I've heard a lot of people, I've seen it on Instagram where people will post interest rates today are over 7, but they'll show where they were in 1964. Where they were 14% or 18%. And that's not the right way to look at this, because what we have to look at is affordability. Because if we were to go back over time into the 60s, the 50s, the 40s, even the 70s when rates were high, you had people getting paid minimum wage in the $1 to $2 per hour range, right? And everything in the grocery store costed less. So when we're actually looking at what does it cost to buy a home, we have to look at everything. We have to look at interest rates. We have to look at the cost of homes. We have to look at wage growth. And for sure, right now, it's the most expensive time to buy a house that's ever been in history, no matter what the rates are. So you can't really say rates were 18% when I was a kid. That doesn't hold up when home prices were $44,000. Right. So I understand why people are nervous. They should be. And you have to be intelligent. Let me say it this way. You have to have an intelligent approach to buying a property right now. And you can't just go out and buy a property and win like you could have in years past. You have to be thoughtful through it. So I had one of my team members came to me yesterday, and she checked in with me because I help all my team members get out of debt, raise their income, save money. All the things I talk about here, I do for the people around me. And she said, "Hey, I got this house. We helped her get it maybe a couple of years ago. Might be 4 years now. Her first home, her payment was over $2,000. She was super scared to buy it, but now she's sitting on like $100,000 in equity. Yeah, really happy she bought it. And she used the down payment assistance program. She had no skin in the game, and she's like, I don't know if I should do this, but it was the right thing to do. And so she's like, hey, I don't really like living in Anderson. I'd like to live in Redding, and I've been thinking about it. I've run the numbers, and she was like, if I were to wait for the market to come down, I'm thinking it might be a little better. I said, are you serious? I was like, you're really thinking that after all the things we're telling our clients about waiting for the market to improve is a bad idea? And she laughed. And basically what I told her is like, waiting for the market to go down it's a bad idea, because if we look at what has happened, rates went from 3% up to they peaked at 8% in a 3-year period of time because of inflation. And if we were to go back at any time in history, home prices would have dipped 30 to 40% with that kind of a rate adjustment. What did they do? They didn't go down. Right. They actually went up in most markets, right? And so a lot of people right now are looking at this market that we're waiting for prices to adjust, and they're saying, when's going to be the right time to buy a house? Because what will happen when interest rates go down is home prices will go up quickly. Right. And we have a supply and demand issue. Most people are aware of that. They know we've had 13 million people cross the southern border. We've had many. Is it that many? It could be more than that. Yeah. Good Lord. 13 million people have crossed the southern border. They need housing. They're putting pressure on rentals and they're buying homes. They can use an ITIN program without a green card and buy a house now. And we also have millennial family formation, which is off the charts. So if you look at it, in 2008, when the housing market crashed, we had 4 million homes for sale. And today we have about 1 million homes for sale. Good Lord. And we have 15 million more households. And because of government regulation, we have not had nearly enough construction to meet the demand of families that need housing, whether they're going to rent or buy. So until that gets fixed, it's going to put a massive amount of pressure on homes or inventory for sale. So what we have right now is a very locked housing market. We have tons of people who own their homes and have a 3 or 4% mortgage or less. They'd love to buy another house. Their needs have changed. They need property. They want to get to a different school district, but they're not going to sell their home, and they're not going to buy another home because of interest rates. Well, when rates come down, what do you think is going to happen? Houses will go up. There's going to be a lot more activity. And we know that because we have all those people that are pre-approved or we're talking to, and they're just waiting. So the question then becomes, it's not a matter of waiting for the timing of the market. It's how do I effectively purchase a property knowing that housing is a scarce resource and renting is going to really destroy my ability to build wealth. How do I do that the right way? But I mean, like, you've got, let's say, for example, 3% on 100 grand, just easy. It went up to 6-7%. So now what I would be paying at 3%, it's double. Yes. But because of inflation, I mean, you might have a little increase on your wage, but your wage hasn't gone up to compensate for that massive increase in inflation. So what do you do in that situation? There was a news article that came out last week that said it was a poll done nationwide. The average middle-class family said that they need to make $160,000 to live comfortably like they did just 7 to 8 years ago. In California or America? That was nationwide. And in California, it's probably higher. And I thought that was crazy. But, we have a friend who I've been helping with his finances, and he needs to make $160 just to live. And he is not living high on the hog. They don't go out to dinner. That's a mortgage. That's utilities. That's food. There was a time that he was like, they weren't even like buying cheese.
Good
And
Lord.
I know that sounds crazy, but you know, in California, 160 grand it's what is that? 12 grand, 13 grand a month. Well, after taxes,
gross,
that's
yeah.
gross.
Yeah.
So if you're taking $5,000 or $6,000 roughly home a month, you've got a $3,000 mortgage payment, and food has gone up 30-40%. Electricity has gone up 100% in 3 years. You can start seeing like it's hard.
Oh yeah, but then you've got insurance. I mean, my insurance has gone up 75% just this year.
Exactly. So it's quite the challenge right now. And I think what people have to realize is the number one thing that I tell everybody they have to do is they have to figure out how to raise their income.
Yeah.
That's the smartest way to buy a house in the next 5 years.
So like, I know it's easy to say that, but let's say somebody is earning 100 grand, which is it's six figures.
Yep.
I know it's not as much as it was 3 years ago, but nonetheless, it's still a decent wage, right?
Yep.
So that 40 hours on a six-figure income is still, I would say, somewhat highly pressurized, right? So to increase your wage an extra, let's say 2-3 grand a month, which would be a decent buffer for you, 30% already on what you're earning, what would you do? Like, because some people go, oh, what will I do? I'll go and start an internet business. But then, every single business takes time to scale, right?
You got to look for the low-hanging fruit, right? So the first thing that someone needs to do is look at the current job they have. Let's say that they're an engineer for an engineer firm, or let's say that they're, in the medical industry. The first thing you need to do is understand what your scalability is within your field.
Okay.
Right. So it's like, what are the roles that are one promotion above you that pay that income, and how do you get there?
Right.
And you got to, talk to your employer, talk to your manager, talk to the owner of the company, if it's a small company, and just tell them straight up, hey, I want to know how to make more money here. What could I do? How long would that take? What kind of certifications, permits, what kind of milestones could I hit that would guarantee me the first chance of getting that? And if that works, then do that and be the best employee at the company. Because that's the easiest way to do it there.
Of course.
Because in California, because of HR laws and employment laws, employee laws, I should say, employers really need to make sure that they are keeping good people. Yeah. And they want to do everything they can. It's really hard to find good people, and you hear that all the time, right? So if you become a good person, which means you work hard, you're going to be you're going to have a lot of negotiating power. You're going to have a lot of leverage. So that'd be the first thing.
Okay.
I would say the second thing would be is within the field you're in, what are some side hustles that you could do where you could solve people's problems? I mean, you and David did that with this podcast.
Right.
You guys have figured out how to use your acting experience, your producing experience, your communication experience, and you've, collaborated with some of the technology guys in your field to build this studio. And you've said, hey, Chris and the other people you guys have doing podcasts now, with the world changing and with short form content, we can help you guys become more relevant and create a personal brand. And we'll teach you how to do it. And, people like me are like, I don't know how to do that. How do I talk on a microphone? We'll teach you.
You're great, dude. Now, bro, you're good.
We'll teach you how to do that.
Yeah.
And we'll help make a solution for you where you don't have to go out and figure this out for a certain amount of money. So people can do that. Whatever it is they do. I was talking to a guy yesterday who was asking me this question. He's a counselor. And I was like, okay, well, have you considered doing counseling on the side? You're working for the county. Are they okay with you doing it evenings and weekends? Because telehealth is a real thing. You can counsel people on Zoom all over the country. Are there other entities that you could work for and do contract work? That's how you have to think.
Yeah, it's good. And I think it's always working within your expertise, right?
Yes.
Rather than trying to go outside of it. You said it's like low hanging fruit. Here's the thing. So we've got to raise our income. Now, when we had the subprime market, there were so many creative ways to get a mortgage. People were doing crazy things, right? If somebody may not have, say, like a 3%, 5%, a 25% deposit, what are some creative ways that people can get lending for a house if they want to get in that market?
That's a good question. So let's talk about first-time home buyers, right?
Okay. Yep.
So first-time home buyers don't have 20% down.
Yep.
And, you know, Dave Ramsey has always said put 20% down. And I really love that idea, but it's just not realistic for most people. Like for the average person, if they would have waited to put 20% down with a 6-figure income, and they would have taken Dave Ramsey's advice back in 2018, and they didn't buy a house till 2023, they would have lost in California $150,000 to $200,000 in equity
Right, exactly.
by saving 20% down.
Yep.
Right.
Yep.
They would have lost out on a lot of money on the tax write-off they would have gotten from paying a mortgage versus rent.
Yep.
And they would have lost out on the ability to live in a property that they didn't have to worry about the tenant evicting them, which happens all the time. You know, so there are programs with down payment assistance, and there are programs that will help you get into a property with minimal cash out of pocket. So that's the first creative financing.
Yeah.
Like, look into that. We have a client right now who applied for this program called Dream for All through the state of California. He was one of 2,000 people in California to get approved for it. And he's going to get a 20% down payment from the state of California.
Free, or does he have to pay it back?
He has to pay it back when he sells the property.
Oh, wow. Okay.
But he's going to be able to buy a property, take advantage of the appreciation, take advantage of the write-off for the taxes, and not have to worry about getting kicked out. He's going to get all the benefits of home ownership on the government's dime.
Right. Which is great because, I mean, you don't know how long you're going to keep that property for, right?
He's probably going to be there for 5 years. The average person's there for 7 years.
And there's no interest rate on that 20%.
He has to pay back the 20% plus 15% of whatever the appreciation is.
Okay.
Over a 7% period of time for the property he's buying, that's going to be somewhere around $150,000 in appreciation that he'll make. So he'll pay them back. What would that be? 20 grand roughly.
But he's got into a property and he's made that money that he wouldn't have if he didn't make use of that.
The other way to look at it is the amount that he was able to qualify for on his income would have been about 100,000 less than what he's able to buy now with that 20%.
Oh, wow.
Because he's putting so much more down. He doesn't have to pay mortgage insurance. So he's able to get a really cool property to live in. Yeah. And they were in a really small rental. They want to start a family. It was a complete win. So creative financing, you know, the first thing I would say is learn about your options. Figure it out, you know, and down payment assistance and some of these grants and bonds are really good.
So where can people go to find out?
Well, they can definitely call me. That's what I do every day. Is we're always looking at these programs, trying to find solutions for our clients. And in the next episode, we're going to talk about how whoever wins the president is going to make more opportunity. Yeah. Because housing is one of the biggest problems in our country right now.
Yeah. What do you see before we get into that? Because I mean, I think, listen, I mean, you know, I'm in real estate. I come to you for everything. Not do I just come to you for advice in real estate. I come to you for all my mortgages. But what do you think, like, what are the predictions for the real estate market going into 2025? Like, just if anybody's got any questions, obviously they can call you, but like, what do you personally think the predictions are for 2025? Because it's quite scary.
I think that's a question we'll answer on the next episode, because it really is going to be largely impacted by who is in the current administration. And so let me tell you what I think is going to happen the rest of 2024. Yeah. Okay. So right now the Fed there's a 95% chance that the Fed is going to lower rates in September by 25 basis points. So if we go back to 2021 or 2022, when inflation started coming up, the Fed started raising rates. Yeah. And he's raised rates for 2 years and left them high. Okay. Now these rates are not directly correlated with mortgage rates, but they definitely impact them, right? Inflation is the enemy of mortgage rates. So the higher inflation, the higher rates are going to be. Our Federal Reserve has two jobs: keep inflation at 2% or lower and keep unemployment low. And so they have a really tough job, because when they raise rates, they slow the economy down, which raises unemployment because people have to lay off because there's less cheap money. People are tightening up on spending, and that's what's happening right now. So inflation is coming down. It's come down in a big way, but it's still bad. So it went from horrible to it's still bad. But the thing is the Fed can't wait for inflation to be rock bottom, because at that point he's going to have an economy that's so bad. Now he has to stimulate the economy, lower rates to rock bottom, pump a bunch of money into the economy, and try to fix it. So he's got a real challenge right now, because what he's going to try to do is start lowering rates before inflation's all the way down, so that at some point he's got this harmonious economy where inflation has come down, rates have come down, and people are starting to ease up, borrow money, buy cars, finance projects, commercial companies are financing commercial jobs again, and that's what he's trying to do. So 95% chance he's going to do that in September. And once he does that, we will see mortgage rates start coming down. Okay, which will create a little bit more activity in the housing market. But it's still going to be difficult because it's going to lower rates. You're going to see more competition, and we don't have enough inventory for people to buy. So what I think is going to happen is you're going to see 10 to 20% more activity by the end of the year. Closed homes are going to go up. You're going to see a little more inventory because those people that are locked in their home with a low rate, they're going to be okay with whatever the rate is, and they're going to finally sell so that they can buy. I still think it's going to be very difficult for the low to moderate income people to buy a home.
Okay. So let's ask this back to politics.
Okay.
If we want a better outcome in the housing market, who should we vote for?
Well, we're going to have to wait for the next episode. I'm going to answer
wait
that.
for the next episode.
The next episode, we're going to talk about that. But what I want to talk about today, though, and right now, and I'm not trying to sidestep your question. We're going to answer that.
Okay, good.
But for now, we're trying to say, like, for people right now that are looking at this housing market, whether they're a renter or they own a home, what should they do? How can they get creative? And I just want to stay on that because I think that there's more ground to cover there.
Yep.
We were talking about creative financing, and I'd like to just touch on a few more things. So I had a guy call me yesterday. He has a house that's worth $600,000. He owes about $300 on it. He has a 4% interest rate, and he found a second home he wants to buy in Shingletown, a cabin, but it's not financeable. It's in bad shape. It needs probably $40,000 of work to be done to bring it up to where he could rent it out and enjoy living there. And he's going to probably make it a short-term rental. And so he was saying, hey, what are my options? Can I get a hard money loan? Can I get a renovation loan? Neither of those were great options for him. But what he can do is he can get a home equity line of credit. We have a home equity line of credit. He can close in 5 days.
Oh, wow.
The rate will range somewhere between 8 and 12%, depending on how he picks it. He can close it in 5 days, no appraisal. He can pay cash for that property. And then he can turn around and refinance the property itself, pay off the home equity line of credit against his home.
That's good.
And because he's buying a property that's not financeable, he doesn't have a lot of competition because most people need to get a mortgage.
Right.
They don't have the ability to pull a HELOC on their house. Right. So he's going to get a great deal. He got his offer accepted today for $179,000.
Wow.
The property's probably worth $220,000 fixed up. And it's a great property, and so that's the intelligent approach people have to take. They have to realize that there is a way. How do I figure it out? I had a client last month who was referred to me from the Good Pasture in that whole group. And this is a gal who recently went through a divorce, and she's amazing. She's working hard. She's got a job, but she didn't have like a lot of opportunity because she was qualified at a certain price point, and she wanted to buy a multi-unit property. There's not a lot of those around, as you know, right? But she was super patient. She came to one of our classes. She called me. We got on a call. We looked at all the different options that were available. And I showed her a couple products where she could buy a multifamily property with 3.5% out of pocket. And she happened to find a property that was off market because she was working with the right realtor who can find off market properties. And I want to get back to that in a second.
Yeah.
We put her in contract. She bought a property. She's literally going to live for free because the rent covers her mortgage.
So good.
So that's still happening in 2024. It's just not around every corner. You have to really get educated, work hard, figure things out. This gal's gone through courses and classes, and she put herself in the best position to do it. So creative financing is the way to buy properties right now. And the other thing that I said that I wanted to get back to is finding unique properties is not easy. A lot of people don't realize this, but in most markets right now in America, 30% of the closings every month never make it to Zillow, Realtor.com, or the MLS, which is the website where realtors put the properties. Because realtors are finding these properties and selling them to buyers off market. And that's going to happen more going forward because of what's going on with the real estate world and some of the NAR commission lawsuit stuff, which is a whole nother episode. Actually, I did one with Josh Johnson a while back, but that's going to happen more. And so what that means is if you're a buyer and you want to buy properties, you want to be shown the best deals naturally, and you want to see all the inventory that's available. You're never going to see it all because the biggest listing agents have a list of sellers that are coming soon to the market, meaning that they met with the agent 3 months ago. They said, we want to sell sometime in the fall. And let's say the listing agent says, great, we'll go ahead and get it listed then. And they'll give them some recommendations on some things that they need to fix on the property to make it show, at the best view it can.
Yeah.
And so what'll happen is those listing agents have, let's say 20 or 30 of those at any given time. And then they've got a bunch of buyers that are trying to look for a unique property. Well, let's say you're the buyer and I'm the listing agent. And you're telling me I want a property on this side of town in this school district with 4 bedrooms and a pool. And we pull up the MLS or you look at Zillow and you say it doesn't exist right now in my price range. Well, then I can say, well, hey, listen, I don't know if they're ready now. They said they're going to be ready in the fall, but I've got some sellers coming soon. And let's go look at the property. There's nothing illegal with that. That's totally legal to do. And let's say that you like the property as is and that you make a deal, the agent connects both of you and you write an offer and they accept it and maybe you lease it back to them for 60 days. That kind of stuff happens every day in every market.
Do a lot of realtors have that then?
Well, some have more than others.
Yeah.
But those are out there.
Yeah.
The other thing is some agents will figure out what a buyer wants and they'll door knock on an area in a neighborhood. They'll find a seller that was thinking about it and they'll make an offer and they'll put a deal together. And so when I tell people that 30% of the properties close without ever being on the market, a lot of people are amazed by that, but that's why it's important that you have the proper representation.
Yeah. And I think also as well, like what you're saying is people have got to get educated. And I think the mentality, and Dave Ramsey's amazing. I know we've talked about him before, but the idea of paying off your property so quickly and not having these creative ideas actually can hamstring you, can't it?
It can. Yeah, it really can. I think that for anybody that has the idea of I want what I want and I want it now without actually doing due diligence, you're always going to be in a losing proposition.
Yeah.
You have to be willing to understand, become educated. I mean, look, there are people that will come and see me. They're super qualified. They qualify for a high amount. They have a great income. They have very little debt, good credit, and the right property comes up tomorrow and they go into contract. That does happen. But for most people right now, in the low to moderate income, you have to have an intelligent approach. I have people call me all the time like, hey, I'm talking to 3 or 4 lenders and I just want to know what your interest rate is. And my question to them is like, well, are you interested in the lowest cost today? Or are you interested in saving a lot of money over time and making a really good decision on the right house, the right mortgage product? Because if that's what you want to do, I'd be happy to talk to you. And what a lot of people realize, if let's say that person goes to XYZ bank to shop for the rate, is they realize, wow, there is a lot more to this process than just getting a number or getting a house. We really need to be represented by true professionals that can help us navigate this well, because in the long run, it's going to pay off.
Dude, you're a genius, bro.
I'm not a genius, man. I've just been doing this for 22 years.
You've been doing it for 22. Yeah, but everything you say, though, is so... a lot of people won't move out of their comfort zone and go creative. I love that you follow rules and follow laws, but you're also exceptionally creative and you do whatever you can to try and package deals for somebody, because I think for you, it's about helping them accomplish their dreams, isn't it? That's really what your heart is more than anything, dude. That's what I love about you.
I think I've gotten myself at a point in a career where I don't have to work with everybody, and I want to work with people that understand the value of it. And luckily I have a lot of people like that all over the country now. So, and I'll work with anybody. So, anyways, I want to get to your question on the next episode. I feel like we covered a lot here. So
we did.
To close on this episode, for people that are looking at buying in this market, whether it's a primary residence, a second home, or an investment property, there are properties where it totally makes sense. There are loan products where it totally makes sense, and there are ways to win. They're just not as common as they were a few years ago. So you have to make sure you make an intelligent decision.
Yeah, it's good, bro. Thanks for having me on.
Yeah, you're welcome. Thanks for asking great questions.